I'd like to
Great.
welcome everyone to Zeifmans' final installment of our non-resident digital event series, Real Estate Edition, Builders, Developers, and Investors. My name is Simon Benmergui, manager at Zeifmans and member of the real estate team. Before we begin today's interview with Jeremiah Shamess, president of Private Capital Investment Group at Colliers International, I'd like to quickly tell you a little bit about Zeifmans. Zeifmans is a full-service tax accounting consulting firm based in Toronto. For over 60 years, Zeifmans has been developing innovative solutions driven by creative insight. Our team has grown to over 150 members, servicing thousands of clients who have been with us for more than a generation. Proof of our connection to our clients remains a trusted long-term relationship based on a common goal of business growth. Throughout today's interview, please feel free to ask any questions you may have, and we'll try to address them at the end of the interview to the best that we can. With that, I would like to officially introduce Jeremiah, today's first interview guest. Jeremiah, please tell us a little bit about yourself and what you do.
Thank you, Sam, for having me. I'd definitely like to first thank you and the whole Zeifmans team there. I've done quite a lot of work with you and your team, and it's certainly been a great time. So to introduce myself, so I lead a team of 6 here, and we specialize in middle market investment sales. What that means is we're selling land and redevelopment properties in the GTA, primarily focused in Toronto as well as downtown Hamilton. And middle market to us means roughly $2 to $75 million building and land sales. So we specialize primarily with the private investors, you would say, and less on the institutional side.
Oh, okay, great. So can you tell us about everything that's been going on in the market with COVID-19? How do you see the markets, the Canadian and international market, looking for 2021?
So that's a good question, Simon. And I think to answer that properly, we have to see first where we've been and where we're going. We know that governments around the world have been telling us, you can't do this, right? So we know this has happened in a sense since March, really with the bottoming of the stock market March 18th. We're now almost into, almost close to a year. We're just behind what an average downtime in the market would be. So I guess basically what I'm trying to say is governments around the world have been telling us you can't do this. And most of the people around the world have been adhering to that and saying, I don't want to do this. So in a sense, governments have been telling you to stay at home, whether they're local or they're municipal governments versus, provincial, statewide, and country. And most people have been saying, I don't want to do the things that I can do. So, you can still travel in a sense, but most people are saying no. So how this has affected real estate is that you've had a slowdown in the velocity of the market pretty drastically. What happened in Canada specifically is we went back down to 2016 velocity levels and volume levels. So, and more specifically in Toronto, we were pretty close to the 2017 levels, almost just under 20 million or 20 billion rather in investment sales data. But what we've seen already is a very quick rebound in certain different asset classes like industrial and multifamily. But we have seen a bit of a slower velocity in office and retail. And so to go back to how this is really affecting us with the COVID situation, because people can't actually go out and do things, and most are not willing to go out and do whatever they actually can do, you are starting to see with the vaccinations that people are feeling more comfortable to go out and do exactly what they are still allowed to do, which is still relatively nothing, right, as we're entering the second lockdown. But from my understanding, vaccinations are actually going to take 2 months for a person to become immunized. So there's been needles in the arm that have started, in December. They're now starting to pick up steam here in Canada. So we're probably not going to see until April a certain first wave of people actually being immunized and the government's being a little more comfortable with opening certain areas up. Now, obviously, I can't make predictions as to when that's going to happen, But I will say that given the fact that we have started the bulk of that, we will likely see probably less of that you can't do this to you can do this happening in the summer, and more people saying I want to do this in the summer, just like had just happened in the previous summer, as things had opened up a bit. So, and it kind of brings me to a next point too that I was looking up previous to this, is that economic depressions, which is what essentially the pandemic has caused here, on average last about 13 months. So if we look where we are today and we take, say, March 18th as our absolute bottom, and beginning to rise rather, we have roughly to the end of April to be that 13 months. Now, do we think that economic downturn will start to subside then? Well, it actually already has, and we've seen that in trades of real estate. We've seen that in the data that's coming out in the past year, and as well around the world. So the consensus now is that we are in the second part of the, call it, de-thawing of the market, which we hope to see increased stability in the market into Q3, Q4 this year. So I would really say that at this point, we still don't know a lot about how the immunizations are going to happen, but we're cautiously optimistic that the pandemic will start to really cease in the sense that we stop having the you can't do this to you can do this in the summer, and we'll start to begin seeing that de-thawing into Q3, Q4, where we'll see governments say you can do this, and people actually coming very shortly along afterwards saying, I want to do this.
Do you think this has affected mostly, let's say, the downtown main business core of the real estate market, or has it also affected more suburban areas where, maybe people have, where there's commercial real estate as well?
That's a good question. So I guess if we talk about leasing activity, certainly I know our leasing team here at Colliers has been tracking this very closely, and we've seen that the downtown core has been hit primarily the least amount.
We got you back.
Here. Yeah, so we've seen the largest bump in vacancies in the downtown core. In the suburban market, we have seen a bump in vacancies, but it hasn't been as drastic as the downtown core. But it's important to note that the downtown vacancy was at 2.7% primarily at the end of 2019 into Q1 2020. So we were at almost a quote unquote unhealthy market as far as landlords having no space to lease at all, and tenants having to push hand over foot in order to find the right space. And I know this was a major talking point for our leasing team here, and it was something that was of consensus primarily going into 2020. And of course, after the stop, things completely stopped in March. But I would say that on the property side, the actual transaction side, we haven't seen a drastic change between downtown and suburban on certain asset classes. So if you look to the office investment sales, that would be one where, yes, there are some downturns and some decrease of velocity in the downtown core versus the suburban core rather. The actual outer parts of the city. We sold an investment sale in the middle of the pandemic, a 50,000 square foot office building in Mississauga. It was actually sold at what we would call 100% value to pre-pandemic numbers. Whereas I know there were a few sales that had launched in the downtown core on the east side and right along Yonge Street. They didn't get the pricing that they had wanted. They actually didn't end up selling. So there are anecdotal evidence that exactly what you're pointing to in the office side, there has been a decrease in velocity. Now, when it comes to multifamily, there has certainly been a bright spot in the pandemic. And we have this saying that sheds and beds is kind of the big factor that people are talking about when looking to buy more commercial real estate. So industrial is included with that. And you've seen not really a bifurcation of suburban and downtown when it comes to multifamily. Obviously, industrial is not in any of the downtown cores, but those two asset classes have shown a significant amount of velocity throughout pandemic levels. And so the last two asset classes probably I'd like to talk about is retail and land. And retail is a funny one because traditionally in Toronto, you would see about 400 transactions, just under 3 billion in sales in the GTA. That transaction volume has dropped 40%, but it actually hasn't dropped the most of all the asset classes. And what we've seen is a change from large retail investment sales over $20 million to smaller sub $10 million retail sales transacting. So you're seeing more volume on the transaction side, but you're actually seeing less volume on the larger transaction side. And that brings me to the last asset class, which is land. Redevelopment land, I would say, is again a bright spot in the pandemic. Now, certainly the velocity of this market has dropped. We've seen roughly about a 50% drop in market, but that's mostly because most of the landowners are sitting on land that they've owned for many years and they're choosing not to sell. So they have the I guess you call it the flexibility of deciding when and where they would like to sell their property. And where, meaning what market, and they are starting to understand that, because the development cycle can range from roughly 3 years to 7 years, depending on what stage the land is on the zoning front. Most of these owners are realizing when they're going to market with their sales, buyers are looking at this as a long-term play, and they're not affected by the near-term lockdowns. So the fact that the municipalities like Toronto, Markham, Richmond Hill, Hamilton, these municipalities are working virtual. So they're able to still go through the entitlement process. They're still able to talk to planners, and they're still able to get through a lot of the problems that primarily have been pushing forward on, the leasing front. They're still able to, in a sense, talk to each other and move business forward. So because of that, you see development land and the velocity there actually still continuing to move ahead. And it's specifically pricing as well. We had a land sale that happened with an offer date at the end of December. We had 7 bids, right? This is something that you would traditionally not see in a lower velocity market. And we have another 2 sites we're bringing out now. And again, we are accepting and assuming rather close to the double-digit bid mark. So based on all those asset classes, you see that the pandemic has affected everyone on a velocity level. The volumes are down roughly 44% on all asset classes year over year from 2020. But again, we're cautiously optimistic moving into 2021, seeing a few bright spots in anecdotal evidence on bids and property sales so far.
Hopefully those vaccines will really turn things around.
Yeah.
Just moving off of the COVID for a little bit now. How do you see? What hurdles do you see with non-residents trying to purchase or invest in real estate in Canada? What type of what's the number one piece of advice you would give to a non-resident looking to purchase real estate or commercial real estate specifically?
Well, see, that's a good question. Why do non-residents want to come to Canada? And Canada actually is, although we are a small country on the realm of, in the global scale rather, if you look at us compared to the G7, we're actually very competitive on a number of different factors. So we look at a number of different data points, and number one is economic output. And if you look at things moving forward, obviously it's not great, but we are still on par and actually a little bit above where the US is. So certainly there's a good economic output forecast moving forward. Secondly, population growth. Where are we in terms of population growth? Well, that's an easy one because we know we're actually leading the G7 in terms of population growth almost by double of the number 2, which is the US. So, we have a lot of people moving into Canada. Number 3, the employment growth. We are on par and actually still leading employment growth in Canada as compared to the G7 too. So if you look at those three factors, we're actually very attractive to non-residents looking to bring investment into Canada. And it's certainly a spot that I would encourage investors to understand, why should I be there and what money should I end up bringing in there? And so you brought up another question too that, I think is extremely important for all those listening, but what is the number one hurdle and what's the most advice for non-residents coming into Canada? That is very simple because it's find good advice and advisors and plan ahead. So if you're coming to bring in a certain amount of assets or cash rather into Canada, you have to understand what your tax implications are. You have to understand how these financial obligations will affect you when you want to exit. So thinking about the end of your investment. And it's certainly something that everyone gets into when they're going to exit an investment, but beginning on that and why you at Zeifmans are so great is understanding how that tax implication can be affected going into the investment so that your proceeds can be increased when you have to come out of it. So it's very important. The number one piece of advice I have is find a good team. You need a good accounting firm. Certainly Zeifmans, I've worked with you. You are extremely good at what you do. You need a good tax lawyer. You also need a good transaction lawyer. And then of course, you need a good broker. On the investment side and on the leasing side, look for specialties and look for someone who has done this day in and day out, and they understand the implications of exactly what you're dealing with.
Yeah, that's excellent. Thank you very much, Jeremiah. How about financing for non-residents? Do they have any specific hurdles that they would have to overcome obtaining financing in Canada?
Yeah, that's a good question. And we actually are onboarding a team right now onto Colliers, but certainly I've been talking to a number of the other smart debt brokers about this because, we do see this and we see this high level, but obviously the debt brokers, they tend to manage this process more closely. And from what I've heard, there are a few different things that happen when you need to get a property financed. So if you are already a landed resident in Canada, so not an actual citizen, but a permanent resident, things are a little bit easier because you can open up a Canadian corporation. You can use that corporation in which to invest in real estate. And I should also point out that I'm not a lawyer or an accountant, so you definitely need to talk to your advisor when confirming this stuff. But what's important is that if you're going to invest through a foreign corporation rather than a domestic corporation, there's a lot of tax implications there. So you have to understand exactly how to do that. Number two, there is banks and non-lenders are going to look at how they want to have recourse and non-recourse loans coming into your investment. So they want to understand what assets you have in Canada. And if you don't have any assets in Canada, they want to understand what assets are outside of Canada and how do they have access to those, right? So, again, working with an advisor who knows what they're doing, a debt broker on the real estate financing side who can understand the ins and outs of this is extremely important because this is certainly something that's going to come up when you're purchasing commercial real estate, and it's certainly going to come up when you're looking to actually divest of different assets too, or rather refinance some of your properties. The last thing that I would say is that, again, it's going to matter where in the world you're actually coming from and how you're bringing the money into Canada if you're going to invest as a pure non-resident. And something that happens there that we've come across time and time again is that when you are actually going to buy a property and you're a non-resident, there are ways to get around financing when it comes to a traditional bank or non-bank lender. We have worked on a number of deals where we've had to utilize a creative structure on a non-participatory vendor take-back mortgage. And this is just a way to get cash, a certain amount of equity into the deal, make the ownership feel comfortable, that you have enough equity into the deal that you're not going to go anywhere, and at the same time be able to service the debt that that vendor take-back mortgage is actually going to have on the property when you're purchasing it. So these are all implications that you're going to see when buying commercial real estate. It's just ultimately important to plan ahead, take your time, don't rush into any investment, and certainly, again, work with advisors who know what they're doing, because they're going to download their knowledge of deals into you so that you understand exactly how would a best practice for a property owner in Canada end up investing into real estate here, rather than coming in, which is a very non-localized event for someone who's not traded real estate in Canada, coming in and having to do something that is a very localized type of business.
Well, that's excellent. Thank you very much, Jeremiah. I think that was some excellent advice and a great insight into the Canadian real estate market. I'd love to thank you for joining us today as part of our real estate edition of our non-resident event series. And if you have any final or closing remarks to add, any advice you could give to everyone listening.
Yeah, well, we have about 8 minutes, so we can take some questions from the audience too. But I guess I would say that just before going ahead, that anyone who's looking into Canada to invest, there's a lot of really good reasons why you should be in Canada. Obviously, we're dealing with to use an overused word, unprecedented time. But right now, there's certainly still an extremely amount of high velocity in the market. And I really am a big proponent of Toronto for a few good reasons. And we have this golden goose that is happening in Toronto here, which makes investing in Toronto really attractive. And that golden goose is low interest rates and high immigration. And this is fed by, call it the golden feed, which is the green belt, which is allowing for a lot of density into a certain amount of area, catapulted by that low interest rate and that high immigration rate. And so these things, along with the fact that Canada is set up to outperform economically, to outperform on a growth of employment, on a growth of immigration, makes Canada a very good spot to invest. So it's certainly a spot to take a very close look at and to plan ahead by hiring the right advisors who have been in deals before and can download their information into you so that you can make the right decisions and be very happy with a lot of the real estate that you buy and then end up potentially selling down the road. And so I'm just a big proponent of Toronto in general, Hamilton, and our greater Golden Horseshoe here. And I really am happy to see the way the market is moving here. And I would encourage anyone who's looking to invest here to take a hard look at Canada, because I think it will pay off in the long term.
Definitely. No, that's great. Thank you very much. If anyone has any questions for Jeremiah, we'll be happy to field them now.
And you also had a question before that you had asked me, that some of the challenges and hurdles that a non-resident will face when coming to invest into Canada. We've done a number of non-resident transactions, and one of the things that comes up fairly often is the fact that there has to be a withholding of tax when it comes to the divestiture of these assets. And this is something that someone would have to work very closely with an accountant to understand better, but there are clauses that we will work with the lawyer to put into agreement of purchase and sales in order to protect both sides of the transaction, because that's certainly a hurdle that someone doesn't want to get into later on down the road when they're being audited, for example. But the last thing I would say is the biggest hurdle I've heard from most non-residents is when they have to divest, they have to pay a certain amount of capital gains. And not all countries around the world have a capital gains tax. Certainly we do, and in the Americas. there is a larger amount of it, and that's something that becomes a big surprise to investors when they end up coming into our Canadian market. So again, hire the right accountants. You know, we know a good firm, hint, hint, Zeifmans, but I think that certainly there's a lot of ways to properly prepare for this so that someone can invest and be set up for maximum proceeds coming out of their investment on the back end.
Right. Excellent. No, that's definitely, everyone needs to keep in mind all the tax implications and capital gains that comes out of any transaction. I'd like to thank everyone for joining us today. Thank Jeremiah for being with us. If anyone has any questions, they can always reach out to anyone at the Zeifmans real estate team. Click on the link in our bio, or you can reach out to Jeremiah at Colliers, or follow him at Shamess. I would like to remind everyone that at 12 of today, in just a couple of minutes, to join us for our next interview with Daniel Marinovic from Dream International. Thank you again, Jeremiah, for joining us. It's been a pleasure.
Before you go, Simon, there's one question here from Charles Pilney, and he brought up a good point, which is, where do you see the most opportunity in the next few years for investment? So in other words, which asset class do you believe has the most upside? And we've got a few minutes here, so I'll answer that quickly. Thanks for that, Charles. The most opportunity I see is likely in the retail class. Office investment would be a second close second, only because there's been a lot of softening in office investment sales and retail investment sales, and there's bright spots in little pockets around Toronto and in the greater Golden Horseshoe. And if you look at where interest rates are going in the future and what you have as a comparison to that, you really don't have a lot of yield happening around the world for investment. So if people believe in the tendencies that they have, they believe in the type of location they have in the property, this will actually be an asset class that I think will outperform in the next 3 to 5 years, only because there's a softening of the asset class right now. So there is a price discrepancy that wasn't there pre-pandemic. So, and the biggest thing that I have this great quote that from Bruce Flats, but you know, what's happening right now is you have the bond market at 0.81% in Canada per se, and you have all this fixed income around the world at extremely low rates. If you look at real estate at, say, a 4 or 5 or 6% yield, it's actually an extremely beneficial yield as opposed to a fixed income asset on a risk-adjusted basis for anyone looking to invest in real estate. So, you know, when you compare it to what you have out there, retail and office could certainly be a very good investment because there's a softening in prices right now. And we see in the future there likely won't be that softening if, in fact, the tenancies are done properly. You know, obviously there are tenancies that you have to be very careful of. So I would think that's the biggest opportunity. Industrial are extremely competitive right now. Development, there is always a lot of opportunity there, but it's very specific to a skill set that is required a lot of upfront work. So you need to know what you're doing, or you can certainly get into a lot of trouble. So thanks for that question, and it was nice to see everyone here. And if you do have any more questions, happy to chat offline. Thanks, Simon.
Thank you very much, Jeremiah. Please join us with Daniel at 12 o'clock from Dream. Thank you.
Take care.